Hello, ladies and gentlemen. Welcome back to the channel. Hopefully, you guys are all having a good Friday. I know things have been tough recently. I know the quarantine may be coming, but at this point, it's whatever we got to do to get through it. Today, I wanted to cover, first what the stock market has been doing, but secondly, a stock that not a lot of people talk about. And I don't entirely understand why, because it's just a massive company, and I'm sure you guys know what it is by now if you guys have been with the channel for a little while. And that is in fact Disney stock, if you guys couldn't tell from the title of this video. So before we get right into it, go ahead and smash the like button and hit subscribe. We have a lot of people watching these videos who aren't yet subscribed. I know the subscriber count has been growing throughout the last several weeks, and I appreciate that, but let's continue subscribing to the channel so we can continue posting more great content and ride through this whole wild wave of A, emotion, and B, just fear and everything like that. We'll get through it together, and we'll get through it, and hopefully on the other side we'll come out wealthier. So as you guys see, the Dow's been down currently about 40 points, right around 2,000 or 20,000, right around that 20,000 mark. Wouldn't surprise me if it drops even further. I've talked to some of my friends and stuff like that, and they believe it's probably going to rest right around 18,000 will be the bottom. I know Jeremy over at Financial Education says the bottom's coming in the next 30 days, and it wouldn't surprise me if it does that, especially if the quarantine comes, where I know people are calling for a 30-day quarantine. And if that happens, I think the spread of this virus, at least in the United States, is going to be very minimal after that fact. So after that happens, I think everything's going to settle down a little bit, if not after this 2-week quarantine that we're currently under. So the focus of this video is going to be Disney stock. If you guys have been with the channel for a little while now, Disney is a company that I am personally involved in, not necessarily working there, but I do enjoy, Disney products, whether it's Disney Plus or the theme parks or whatever it may be. I do enjoy Disney. I think they're a great company, and they've gone through they've made some moves these past couple days and past month with their CEO Bob Iger stepping down and being replaced by Bob Chapek, who couldn't have joined in at a worse time. Obviously, he's been with the company for a long time, but it's got to be rough on him these last couple weeks and stuff like that, dealing with the virus and everything. But as you guys see, $88 a share for Disney, ticker symbol DIS. That is absolutely crazy. I've bought in around 135, a couple shares there. I bought in around 120, a couple more shares there, and I'm about to buy in a couple more shares because you're never going to see this price again in your lifetime. It may go a little bit lower in the virus if the talks continue, and obviously the theme parks are shut down, so their earnings are going to be so destroyed, possibly for all of 2020, and that may drive the price a little lower, but you're not going to see Disney outside of the triple digits the rest of your lifetime unless something goes very bad. $88, an absolutely incredible buying opportunity for Disney. So like I said, I'm probably going to make a couple more purchases. Market cap of $161 billion. Again, we all know what Disney is. They have the streaming platforms. They make movies. They have the theme parks. They have all sorts of different things. They have branded food, all sorts of different stuff. You're bound to see Disney everywhere. Earnings per share of about $6. PE ratio has fallen quite a bit. I believe they were up by like 28. Their PE ratio was pretty high there for a while, and I was still fine buying in. Now they're at 15. Very attractive PE ratio. Beta of 1.04. If you guys haven't checked out my beta video on beta and what that means, go check it out. I posted a couple of videos ago, so it shouldn't be too hard to find, of 1.04, meaning it's only slightly riskier than the entire stock market, and I wouldn't be surprised if that number falls a little bit further just because of how big Disney actually is. And as you guys see, 1 year target estimate about 147. About a week ago, or about a couple weeks ago, this was at 160. And you guys just got to sit and think to yourself, not just necessarily with Disney, but with other stocks. You guys just got to think, is this the same company before this virus came? And when you look at something like Disney, The answer is yes. When you look at something like Carnival Cruises, the answer is yes. The cruise industry may be slammed, and it may never recover to some extent. But if you're buying into Carnival at $10 a share, and you're gonna make several dollars to tens of dollars on the shares you've bought of Carnival, and obviously on a company like Disney, just massive entertainment company, you're going to make money off of this, as you guys see from the 1-year estimate. And that may drop down a little bit more, but I don't think I think Disney is just a perfect stock to be buying into right now. Scroll down to some of their articles. They have been releasing a lot of digital content on their Disney Plus. Their new movie Onward, which is, I think it just came out in theaters like a month or two ago, which seems very early for them to be launching it here in a couple weeks. I know the Disney Plus got delayed in India due to all the fears and stuff like that are going on, so that kind of affected the stock today. Walgreens Boots, Walt Disney shares losses contribute to Dow 175-point drop. So it's really weighing things down, and that's mostly because of the fact of obviously the virus, but because of the fact that they had to close down their theme parks and stuff like that. So let's take a look at their financials real quick. The net income has been pretty steady, about $10 billion over the last, or this in 2019 was reported. Gross profit has increased year over year, essentially. Let's go to the balance sheet real quick. So the total assets they gained $100 billion in total assets in 2019 after 2018. Total current liabilities, you love to see that. Total liabilities, $100 billion. 193 billion, so almost double in total assets, and they just jumped massively. I assume that's because of things such as Fox and Hulu and all sorts of different acquisitions they made this last year. And Bob Iger really went out with a bang, and whether you like him or not, he did a great job running Disney and expanding the media empire that they are. Let's look at the cash flows on this. Let's see if we can't find cash and cash equivalents. Net cash, okay, cash flows, investments, other investing, cash flows, debt repayment. So obviously they've acquired a lot of debt, which isn't necessarily a great thing that you want to see. Net change in cash is maintained positive over this time. Free cash flow, okay, operating cash flow. So they have about $5 billion or about $500 million in free cash flow. So obviously that isn't a great thing you want to see from a company like this at a time like this. But they have enough money in assets and all sorts of things. If worse comes to worse, they could sell some stuff, which they're not going to do. They're going to be able to survive. They may cut their dividend. Their dividend isn't very high to begin with, so you're not buying into a company like this for dividend reasons unless you want to see potential dividend growth, which will come with time. But obviously, currently, they're not going to grow their dividend, and they may have to cut it to save a little bit more money. Let's see if we can't find it. So dividends paid, they paid about $3 billion in dividends last year. That may get cut. It may go down to zero, and then they have $3 billion that they're not paying, and either A, they could put back in their company, which isn't a bad thing. I may make a video on why dividends aren't always a great thing. If it goes back into their company, they could grow their company more, or they just save the money and stay afloat. That $3 billion is really going to help if they do cut it entirely, which they're not going to do, but they may cut it slightly. So let's go back to the summary thing and wrap this video back up. So the open for the stock today was $96. It's down 6%, almost 7%. I just think, for me personally, like I said, I'll be buying a couple more shares of Disney, and it's just at a really, really attractive buy-in point. I know Jim Cramer, whether you guys like him or not, some of his videos are crazy. You have to take what he says with a grain of salt, because he's kind of crazy with a lot of the stuff he says, as I said. But he said when Disney was at $110 to $120 a share, he's like, you're never going to see this again in your lifetime, let alone $90 a share. So really attractive company. And you just got to think with some of these stocks, like I said, are these the same companies before this virus? And the answer is yes for a lot of these companies. Some of these airline companies, I've invested in Delta currently, which I don't think is going to disappear, but some articles came out recently talking about the fact that some of these airline companies may go bankrupt if the government doesn't act, which I assume they'll act. So Some of these other companies may disappear. You just got to be very careful in a time like this. But for me, Disney is a great buy opportunity currently. So leave a comment in the comment section below what you guys think about Disney. Are you guys buying shares of Disney? Have you guys already owned shares of Disney? And at what point did you guys buy in if that's the case? So until next time, guys, leave a like and subscribe to the channel. Stay safe out there, guys, and happy investing.